Hey guys, welcome back to episode 11 of US Stock Market Technical Analysis. In this video, I'll be sharing with you my technical insights for the S&P 500, the Dow Jones and the Nasdaq for the month of December. As we reach towards the end of the year, the markets typically rally during this period of time. And some even call this end of year rally the Santa Claus rally. So are the S&P 500, Dow Jones and Nasdaq or the US stock market as a whole going to rally during the month of December? Let's take a look and we'll begin with the S&P 500 first. We'll go on to the weekly time frame and then work our way down from there. Earlier part of the year, we had this very steep and fast decline of stock prices due to the pandemic. However, after bottoming out in mid-March, the S&P 500 has staged an incredible recovery. We see this huge upside move in prices. We had a bit of a consolidation over here for prices to digest the move before it. So prices took 1 week, 2 weeks, 3 weeks, 4 weeks, 5, 6, 7, 8, 9, 10, 11. So prices took 11 weeks to digest and consolidate the move over here. And after prices consolidated for about 3 months, it broke to the upside. And right now we are in new high territory. Let's take a look at the daily time frame and bring on the technicals to see what's going on with prices. Let's zoom in over here a bit. In the most recent weeks, we see prices forming two gaps on our price charts. So the first one is over here and the second one is over here. For the first gap over here, the gap wasn't filled by prices. And for this gap over here, the second gap, the gap was also not filled. And this is quite a bullish sign for us as investors and traders in the stock market. And over here at this green box, prices are finding support at this level of around 365.67 to around 365.11. So for the first candlestick, when prices reach this area, it is being supported by buyers which push prices to close above. And similarly for the second candlestick, buyers step in to push prices up to close above the support area. For the third candlestick, we also see that prices are being supported by this area over here. Now let's take a look at the 1 hour time frame. So we'll zoom out a bit. So this empty space between the two candlesticks represent a gap up for prices. And usually when prices gap up, the space between the two candlesticks usually is an area of support. So for this case, prices managed to find support in this empty space between the earlier two candlesticks over here and over here. So over here, prices managed to find some support and it pushed to the upside. And right now we are ranging a bit on the 1 hour time frame. If we take a look at the right side of the chart, there are three main ways prices can move on from here. Prices can move sideways for a while moving forward. The second way is prices might fall from here. So the first support that I'm taking a look at is this green box over here. And two things can happen at this support area. Prices can either find support over here and move towards the upside or break through the support level. And then the next level of support is at this price level of around 364.34. And the reason why this level of 364.34 is a support level that I'm taking a look at is because at this level, this represents the lower end of the gap. So if prices do manage to break below this support area, then the next support level that I'm taking a look at is this price level. And that is the second way that prices can play out. The third and final way that prices can play out for the S&P 500 is prices move to the upside. And I believe upwards is the line of least resistance for the S&P 500 moving forward. That's my technical analysis for the S&P 500. Now let's take a look at the Dow Jones. We'll begin with the weekly time frame and then work our way down from there. So we'll clear the technicals. This is the price chart for the Dow Jones, and similar to the S&P 500, there was a huge rebound in prices before prices consolidated for a bit to digest the move, and then now it broke to the upside and is forming new highs right now. The Dow Jones, however, is a bit slower compared to the S&P 500 and Nasdaq in terms of its recovery. And as you can see on the weekly time frame, it is only recently that prices managed to make new highs and match its pre-pandemic high at this point over here. And the reason is because the Dow Jones Industrial Index comprises of more industrials and financial companies. And these companies have been harder hit by the pandemic relative to other companies. And as a result, their stock prices took a relatively longer time to recover. And that is why for the Dow Jones, we are seeing a slower recovery as compared to the S&P 500 and the Nasdaq. Okay, let's move on to the daily time frame now and bring on the technicals. Over here, we had prices gapping up, and this gap by itself was very bullish. However, if we take a look at this candlestick over here, the candlestick itself, ignoring that prices have gapped up from the previous candlestick, is a bearish sign for us as investors and traders. And the reason is this: there's a very long upper wick for this candlestick. And what this means is that prices open at this level of around 294.68, and prices will push up all the way to this level of around 299.22. And it is what that happened next that provides us a bearish sign. The sellers start to step in and push prices all the way down to close at this price level of around 291.6. So even though there was a gap up from this candlestick to this candlestick, on this candlestick alone, we see that there was a lot of selling pressure for the Dow Jones. And for the next couple of weeks, we see prices trading between this range of around 300 to around 291. So a range is characterized by an upper head resistance and a lower support level. When prices reach this support level below, buyers will step in to push prices up. And you can see that prices move up from here. And then when prices reach the above head resistance, sellers will step in and push prices down. And similarly over here, prices managed to find support over at this area and it was pushed to the upside and it met resistance at the same area. and then it was pushed down, and then right now we see for this candlestick and this candlestick over here, there was a clear rejection of price at this area of resistance. So the resistance over here is certainly quite a strong one, as shown by the multiple times that prices were rejected from this area. Now let's take a look at the 1 hour time frame to have a greater insight into prices. We'll zoom out a bit first. So this box over here is the resistance, and this box over here is the main support level. But within the range formed by these two areas of resistance and support, there's also an area of interest. Over here we see that there was a clear rejection of prices at this area of support. And we see that this zone was an area of interest because prices were rejected from here, and there was a bit of struggle over here. Furthermore, we also see prices finding support at this area of interest. So on the 1 hour time frame, we get an even clearer picture of how prices are reacting to these areas of resistance and support and areas of interest. So for example, over here we see that there was multiple price rejections at this area of resistance. And we see another one over here, another one over here, and another one over here. So we see that this is clearly a strong area of resistance because prices are facing a lot of struggle to break above this area. But for the most recent candlesticks over here, we see that prices are still holding up quite well at this area of resistance. So if prices manage to break above this strong area of resistance, then what I want to see prices doing is it move upwards before finding support here and then continuing to the upside. However, if prices do not manage to find the strength to break above this area of resistance, then the next level of support I'm taking a look at is over here first. If you look towards the left side of the chart over here, you'll see that prices managed to find some support at this price level. And if prices do not manage to hold at this level, the next level of support that I'm taking a look at is this level at this green box over here. That's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So we'll go on to the weekly time frame and we'll zoom in a bit. Alright, and by taking a look at the weekly time frame for the three indexes, we see that the Nasdaq has been the one performing the best during this year, and it's also the index which has been least affected by the pandemic. So we had this huge move up here, before we had this consolidation over here, where prices moved sideways for quite a while. But in the most recent week, the Nasdaq managed to form a new high. Now let's take a look at the daily time frame and turn on our technicals to have a greater insight into what is happening with the Nasdaq. So over at the daily time frame, you can see that there was a long period of consolidation where prices moved sideways for quite a while. However, in the most recent days, we managed to make new highs over here. So for those who are bullish about the Nasdaq, this is good news for the Nasdaq because the Nasdaq is now making new highs after a couple of months. So that is the bigger picture of things for the Nasdaq. But if we take a look at the more micro picture, specifically the individual candlesticks, we see that for this candlestick over here and this candlestick over here, there was a bit of price rejection when prices reached new high over here and also over at this point over here. Let's go on to the 1 hour time frame to have a greater insight into prices. We'll zoom out a bit first. This is the area of resistance and this is the area of support that prices range between for the last couple of months. But in between these two ranges, there are also some areas of interest that we can pay attention to, specifically this area and this area over here. So over at this area over here, we see that there was a bit of resistance when prices reached this area. And after prices broke above this area, it then became an area of support, where the old resistance became a new support. And if we move towards the right a bit, we see that over here prices are finding it quite tough to break above this area of resistance. So if prices can't break above this area of resistance and it falls back down, the area of support that I'm taking a look at is this area over here. The second scenario is buyers coming in and finding the momentum to push prices to the upside. Then I want to see prices moving up before finding support over here and continuing to the upside. And I'm personally bullish for the Nasdaq because if we take a look back into the daily time frame, we see that this was an area of consolidation. So in a consolidation, two things typically happen. Either the stock is being accumulated or the second is that the stock is being distributed. And based on the characteristics that the Nasdaq is displaying over at this consolidation over here, I believe that the line of least resistance is upwards. That concludes my technical analysis for the Nasdaq and the US stock markets as a whole. Hopefully you guys have enjoyed and learned something from my US stock market technical analysis video and my technical insights on the S&P 500, Dow Jones and the Nasdaq. If you did, smash that like button because it will really help my channel grow and allow me to produce more content such as this. And if you haven't already subscribed to this channel, make sure you subscribe to this channel because I post one new video about investing, trading and the stock market each week. I'll see you in those other videos to your financial success.